Hey, it's Soleil, and this is episode 210 of the Orange Pill Investor. Friday is roll day, so let's get into it. It is a little bit later in the trading day than I'm used to, but had some stuff going on, and that's one of the beauty of selling options is you don't have to just be staring at the screen 24/7. So got 2,200 shares. I had rolled two calls down to 124, so I can buy these back for practically nothing. All right. And I still have 20 at the original price. These are definitely worth not much. Probably won't let me get this fill. I'm gonna have to go up and pay the full $3. Annoying. AF. All right, got that. I've got this put that will be assigned today. So I'll be assigned these at 125 a share. Lower my average price down a little bit. I've got these long calls that are getting just absolutely wrecked. The price of these is below half. The price of these long calls is about, what, 2/3 or something. These shorter date long calls really flip-flop on price. Be interesting to see if I want to keep Tesla going. Hilarious, because I sold off my shares at about basically the 217.50 price. And I can go back and get Tesla for $2 cheaper now if I want to. But I don't want to. I think I'm just going to let this ride. This is still up relative to what MicroStrategy has been doing. Basically just killing all my hopes and dreams. Hell, even my Tesla trade price I'm upside down on. That's wild. All right, while I got it selected, I'm going to go ahead and... What's this recent price? Okay. It was big time up, big time down, and now it's just kind of doing what it do in the middle here. But this is probably on a little bit of a discount. What did I sell my Tesla calls for? When I dumped them. So the 540 strike, 650 day calls, I got 1775. And what is that, 830 days? Got 2600, so 17 and 2600. Crap, I already forgot what the dates were again. June 18th, December 18th. All right, so they were 17. So those are the exact same prices. And December, I sold those for 26 and they're about 25. Yeah, so that's not really a tremendous discount. So let's just do, let's check business as usual. If I sell a call, 1% premium would get me right about here or here. And that is $12 in call away value, which is like 5-6%. That's not terrible. Yeah, let's do that. Click $246 there. With MicroStrategy, I'm considering this a bit of a dip here. So I don't know if I want to. I don't know if I want to sell two covered calls that limit me too much on a rally. But then again, as long as I'm buying long calls with the premium, maybe that's fine. All right. At least this next week, let's do business as usual. I think we're getting interest rates news next week, the week after next. So maybe I will be a little bit more cautious next week. So if I sell 22 of these, partial fill. Okay, they filled. That was $500 a pop. Times 22. So it should be about 10 grand, but I think it only increased my buying power. Shoot, I wasn't paying attention. Yeah, I think it only increased my buying power by about 6 grand since this is a margin account. All right, but business as usual, I'm going to sell a put for next week at the money. Collect another 510. So I'm trying to increase my long positions every week. And then these 100 shares will be assigned. So on Monday, I can sell another covered call against this. And with that new put that I sold, I collected $500, right? So I can buy and try to dollar cost average into this February 21st long call. I can get 2 of those for cheaper than I actually spent. So that works. I've got 270 delta worth of long calls here And I have 580 delta here, so that's 7. Was that 850 combined? So that's about 225 delta covering each 1,000 shares. Forgot about the 200 that I collected here. So I can actually pick up one more, maybe. All right, I think I ended up with about the same amount of buying power as I started. So looks like I've reinvested most of my profits. And then on Monday, I should be able to sell another covered call, get a little bit extra there. Let's check the IRA. Since I'm doing two different strategies in here, and then even with the poor man's covered call, I have two different strategies. So this is driving me a little bit nuts trying to keep track of this. But today's calls I can close. Do not have some, I don't even have enough buying power to close these. So, whoops. So let's roll it. Expiration dates, we're going out to 9/13. And rolling this bad boy down. Doobie-doo, down, down. All right, we got fills there. That's going to give me a little bit more buying power to play with. Now I have these that I went up to 42 days. And generally I try to roll these. Oh, wow. You try to roll when you're going to be able to collect about 50% of the profits, which is basically now. Usually that takes 2 to 3 weeks, but since the price is going to shit, I can actually roll these now, which is a little bit annoying. But yeah, let's see if that's what I want to do. Or is collecting 300 over the next week. Actually, probably less than that. Probably 25% of that. All right, let's do it. Let's see if I can roll. Wait, what are they at now? Yeah, to 49 days. Well, even if minimum I need to collect is 4 times 1%. So that would be like 460. I don't know if that's worth it. I can actually see, I got the 140s now. If I roll out 1 week, I'm only going to get an extra $100. So the only way to collect more or collect what I collected in the first place How much did I get the first time? At 140, I collected 1100. So I could roll to like 125. Oh, but I need to double check and make sure I'm doing these right. So right now, the 140 strike minus the share price is $35. Yeah, because these are cutting it close to even being viable. No, I'm sorry. I'm looking at the wrong thing. Yeah, 70 delta is cutting it pretty close. So the current price, 115 minus $15, excuse me, is $15. And 15 plus the premium, which is about is only $26. So that's, yeah. So maybe we will, well, this poor man's covered call was legit when I entered it. So if the price does reverse, it should be fine. But if I was entering into this trade today, I wouldn't pick these strikes. I'd have to be a little bit more conservative with this. I'd have to probably pick at least the oh no, man, I am screwing up my math big time. So the long call that I'm using is the 100 strike. So if I subtract the I was I was subtracting the current price, but I just need to subtract the short strike and subtract the long strike from it. So that's 40, and that's already more than the value of this. So 40 plus the premium is fine. I could totally roll this down to probably 135. Yeah, 135 would be easy peasy. Because then the distance between the strikes would be 35. Plus the 800 is 43, which is well over the value of this. I could actually even go down farther. Let's see what I get at 130. 30 plus 9 is 39. And 39 is greater than this. So I could roll out a week and down, collect approximately 370 per contract. Oh, this is only one contract. I know it's silence, but you could probably hear the wheels turning. Yeah, I think I'm overthinking this a little bit too. This contract has only been on for 1 week. Half would be 550, 575-ish, 580. So it's almost down to that. I think I'm going to wait another week and see what happens. And then that'll be the week before rates, I think, are announced. So next week will be the perfect time to take these off and then maybe leave them off for a week. We'll see. All right. So that was the long ass way of saying I ain't doing shit with either of these covered calls until next week. These are the long calls used to set up that poor man's covered call. Nothing needs to happen there. However, I do have $1,400 worth of buying power. I need to do something about. So let's go as long as possible. I can either go February 25th. These calls cost me $200. Or I can go out to, what is that, 400 something days. Oh, and that costs exactly 14. Oof. 1430 would be the mid price. Probably won't get a fill here. Unfortunately. What is that, December 19th? All right, so if I try to buy one of these, the mid price, yeah, it's not going to work. I can buy one in April. No, I can't because it doesn't go high enough. That only goes up to 220 in April. Week. All right. So let's see. Can I get. Holy crap. I've got so many options here. Oh, was that two options added together? Yeah. Sorry. The price was higher because I didn't realize I just kept adding options here. All right, we got a fill there. We got $200 left. So now that works out because that's just enough to buy one of these bad boys. So added 0.7 delta there. Added, was it the April one, right? Yeah. Added 0.3 delta there. So that's nice. And with the $50, I could probably just leave that there for a little bit of cushion so that I can actually close my contracts next week. All right, double checking. 300 shares, 3 covered calls, 4 covered calls against 4 long calls. And then, actually, okay, so here's the 1 long call that goes with this short call. Here's 3 covered calls that go with 3 leaps. Speculative long calls, speculative long call, 4 speculative long calls. All right, that one's good to go. Trading the joint account. This CLSK debit spread is absolutely wrecked. But it can just sit there. This thing has 196 days to expiration. So this is nothing to be worried about. All right, I got assigned early. I had sold a put here at the 144 strike. And let's just see what I got paid on that one last week. The 144 put. See, I only know the credit that I got from the week before. So I sold for 500. Probably sold another one for 500, but I had to pay 200 to roll it. So that's probably about 800. So my true cost basis is probably 136. Still upside down $20 a share. But knowing my cost basis is 136 is going to make it much easier to actually find a covered call strike to get some profit against. If I do 1 week, which I probably won't do, at 136, yeah, I can't quite collect much. I would have to go down to get 1%. I would have to go down to about the 130, which isn't terrible. But let's go out to 49 days. And if I want to at least collect 4 or 1% a week, and I'm going to collect half of the premium every 2 weeks, then I need to multiply this by 4. So I need to collect about $460. So I can do the 155 strike, which is well above my cost basis. So if my cost basis is 136, let's just try to sell the 135. And this would be collecting about $200 a week, which is almost 2% a week. So I like that. And the cost basis, once I sell this for 800, will reduce my cost basis from 136 to 128. So really I could get even greedier and go to 128, but I think this works. Just in case we get a big rally. All right, collected. And since this is a 49-day covered call, it actually might take 3 weeks to collect this. So that would be more like $270 a week. No, half of this in 3 weeks. So 410 divided by 3. Yeah, that might only be about 1% a week if it takes 3 weeks to collect half of this. All right, so I got paid $800 worth of premium here. Let's spend it. Let's look at April again. I think I liked April. I only collected $800, but we are on a bit of a discount in my opinion, so I don't mind spending a couple extra little dollars here. All right, sold a covered call against my shares, reduced cost basis, added some long positions. So right now it looks like I have 97 and 60. So what is that? 157 in long delta here. That'll work. All right, so that's all of the Tasty Trade accounts. All right, I don't like this getting this close to my to a margin call. So instead of rolling this riot put or taking assignment, I sold it for 7, and I can basically break even, buying it for 9. So I'm just going to buy this back, put a little bit of buying power. I probably shouldn't have sold that put last week anyway. I was just getting a little bit greedy, trying to take advantage of these dips. But this, in case the prices collapse another 10, 20%, I should really have some cushion here. And I already rolled this CLSK call to next week, so nothing to do here. I actually have nothing expiring today. I have the these all at the 1018, so those were 45 days to expiration trades. Let me just make sure. So I have one weekly on CLSK. I was doing both strategies, and I have 145 DTE here. Got 200 shares. That works. 600 shares of Riot. 6 sells. That works. So it doesn't look like there's anything for me to do else here other than cry because my value is down under 5K again. But that's basically to be expected with a volatile stock. And it is kind of funny, though, because there's been some testing on covered calls, and they say, oh, they get wrecked in a bull market. And granted, it probably does get wrecked like right here. But even though we've been in a bull market since really December, this stretch right here did not hurt the covered call strategy much at all. As long as you had any call away value built in here, and basically I'm thinking about MicroStrategy correlating to that, or to a certain extent the miners as well. Yeah, so we've been in a bull market since December. Covered calls were probably doing fine this whole way, and then all of a sudden you missed out on all of this. So I'm not going to say covered call strategy is superior to HODL. There are absolutely trade-offs, but this is all bull market. And then even since here, since it topped out at, this was close to the $200 a share, I thought. Covered calls printed here and then maybe lost out here. They printed here and lost out here. They printed here, lost out here, and they're basically printing here. So who knows how long this chop will continue. It may be the rate cuts. It may be the election. It may be something cyclical. It may be, any number of different things. I think there's, what is it? Anyway, there's some big Bitcoin holders, I think, that have some selling pressure. I don't know if they're required to or simply choosing to sell a bunch of Bitcoin. And I don't think that's going to take too much longer. And then I should probably be more versed on what MicroStrategy is doing, but I think they're selling shares to buy Bitcoin. I don't know. I don't exactly know what the hell's going on. But the point is, when MicroStrategy was $200 a share, it could have went to $400 a share, but it didn't. So yeah, selling covered calls since March has not been terrible. Selling covered calls in February was terrible. End of February, beginning of March, basically got wrecked. So, I miss out on this big upside sometimes, but from here to here and from here to here is fine. And that works out just fine for me. So, all right. Be good, y'all.